Hello everyone. Today we will be discussing a 4-hour CRT model specifically for futures. In this lecture we will talk about indices in specific. Many of you have been asking for a futures model, a 4-hour futures model, and in today's lecture I will provide that. I will not be wasting any time. This will be a very straightforward and direct model. Very similar to the Forex one. However, the times slightly change and a few other factors. Let's get right into this. The 4-hour CRT model designed for futures. Many of you guys on Twitter have already caught on to what the 4-hour CRT is in the futures charts. Good for you. This video is for the ones who have not yet found it. There will indeed be chart work at the end of this video. Do not worry. Alright, so let's get started. Firstly, we're talking about the 4-hour time frame. We want to locate the 6 a.m. 4-hour CRT. This means locate the 6 a.m. 4-hour candle. In this scenario, this is the 4-hour candle of 6 a.m. You then wait for a 15-minute CRT at the highs or lows of the 6 a.m. CRT. In this scenario to the right, you would want a 15-minute CRT at the highs of this 4-hour CRT. Number 3, the purge will occur during the 10 a.m. hour up until 11:30 is accepted, sometimes even 12. That's very important as it is not written here. 10 a.m. up until 12. Step number 4, your entry. Enter when the second candle of the 15-minute CRT closes, or enter off of a 15-minute or 5-minute, 4-minute, 3-minute, 1-minute order block. Recognize how I said 5-minute, 4-minute, 3-minute, 2-minute, 1-minute order block. That is because you are able to refine your entries to the tick. I want to bring something up here. Why is this CRT setup a high probability setup? Simply put, we have 3 confirmations and a 4th one being the key level. Confirmation number 1 is a timed CRT. We are using the specific time of 6 a.m., the 4-hour 6 a.m. candle as our larger time frame CRT range. We have a timed purge, a timed turtle soup of the range happening between 10 a.m. up until 12 a.m. You would want the purge to happen between 10 and 11:30. However, 12 a.m. is accepted. And then we have the lower time frame CRT within the higher time frame CRT, this being the 15-minute CRT, either at the highs or lows of the 4-hour CRT. That is confirmation number 3, a lower time frame CRT within the higher time frame. Confirmation number 4 would be the key level, of course. Using a key level will drastically increase your win rate and your overall success in the markets. Hopping on to a quick example here before we go straight to the charts. This is a 4-hour time frame. This candle being the 6 a.m. 4-hour candle and the next one being the 10 a.m. 4-hour candle. We have a daily key level here, which is a daily fair value gap. This will be our key level. Your goal is to enter short as soon as the key level is tapped and you notice that 15-minute CRT. As you can see here, the 10 a.m. candle, the 10 a.m. 4-hour candle, has closed back into the range. The next candle opens, traces above its open into a bearish PD array, and expands to the opposing end of the range, which range? The 4-hour CRT range. So you have multiple forms of entry here. 15-minute CRT above price. You can even wait for the second candle to come to a close, wicking the high or low of the 4-hour CRT range, and entering off of the third candle once price opens, travels above its open into a bearish PD array, probably turtle souping a high on the lower time frame, of course, and going short, targeting the 4-hour CRT low. The reason this setup right here is high probability compared to a normal CRT without the key level is in fact because we have 4 confirmations rather than 3. Now, let's head over onto the charts. This is going to be a good one. All right, so starting off on a 4-hour time frame, as you can see, we're going to look for every single 6 a.m. candle. To do this, we will use the small trick right here of the Fibonacci time zone. Let's head over to 6 a.m. Let's not use today as the example, as I am currently long. All right, partials have been hit. 6 a.m. up until 6 a.m. Now, as you can see, every single orange line is 6 a.m. 6 a.m. Sorry about that. 6 a.m. 6 a.m. 6 a.m. 6 a.m. 6 a.m. and so on and so on. 2 a.m. 2 a.m. All right, so the times change over here. We're just going to need to be cautious about it. For example, as you can see, what sticks out to you here? There are many different examples of what a CRT can look like. And this video in specific will help a lot of you guys understand that CRT does not need to be 3 candles. Now, this is something that I was not going to bring up in this lecture, and so I will only touch base on it. My private members already know this. A CRT can look like this. And yes, this in fact is a valid CRT, where price action wicked below a low and continued expanding higher in the same exact candle. In order to execute a trade like this, you would need to be more advanced, executing off of the turtle soup or the order block. There is no third candle entry. This is not a 3 candle model. This is still a CRT. Now we are going to avoid looking at these examples right now. We will be focusing solely on the 3 candle CRTs. For example, right here we have another, actually in this example we can use the CRT as the low was hit, but the high was not yet hit in the second candle, but instead was hit with the third one. So let's go ahead and drop down time frames to a 15-minute. All right, let's try to locate that 15-minute CRT at the high or low of the 4-hour CRT. Right? So step 1 was to draw out the high and low of the 4-hour CRT. That is complete right here. Step number 2, locate a 15-minute CRT at the low or high of the 4-hour CRT. As you can see right here, there is no 15-minute CRT that I would be executing on. Now, of course, this is a CRT in itself. even though there is a close below. However, I would have not executed it. Let's take a look at a 5 minute. All right, we are not able to look at that 5 minutes because of the trading view plan. Regardless, this is a bad setup. I would have not executed a trade. Now, let's swing the time back once more, heading over to a 4-hour time frame. I'm doing this so you guys understand I am not cherry picking anything. This is all random. I'm literally picking random days in front of you. All right, let's go ahead and take a look at this example right here. As you can see, the 6 a.m. candle, 9 a.m., the 10 a.m. candle, the next candle broke through the low and continued crashing down. There would have been no trade here. Let's take a look here. We have the 6 a.m. candle, the 10 a.m. candle breaching the highs and reversing lower. This is actually the example that I was showing you before. Okay, let me go ahead and show you. This was in fact a daily key level. For those who have doubts, those of you who think that I am making my analysis up, as you can see, a daily fair value gap. Not only is it a daily fair value gap, this is a daily high. That is a key level in itself. Let's drop back down time frames to the 4-hour chart. As you can see, the 4-hour CRT into a daily key level, reversing lower. Now, for the sake of the video, we will not use this example as I explained it in the slideshow. Let's go ahead right here. Perfect example actually. 3 candle model. However, this is 2 a.m. Let's push this over. 6 a.m. candle. Not going to use this one. However, let's go ahead and see what would have happened. All right. Full transparency here. With the high and low drawn out. Let's hop onto a 15-minute time frame. Highs and lows here. What happened at the highs? Any 15-minute CRT here. It looks like this could have been that 15-minute CRT at 10:30. Sadly, it was not respected, and you would have been stopped out. Let's try to locate. Well, actually, no, you would have definitely been stopped out with this move above at around 18 o'clock. So right around the closing time, which is fine. It happens. All right, so you will not win every single trade. This example that I just showed you, it's basically showing you that this is not a 100% win rate strategy, and do not come back into the comment section trying to tell me that this is this is not working. This is bullshit because you were not able to catch a trade. All right, let's take a look at this example right here. From what I can see, it looks perfect. 3 candle CRT, first candle 6 a.m. creating the range high and low. Second candle turtle souping the range high, and the third candle expanding towards that range low. Hopping onto a 15-minute time frame, let's go ahead and try to find a 15-minute CRT. We have a clear 15-minute CRT being respected on both ends, as you can see right here. Let's just draw it out. We have a 15-minute CRT. Actually, one right here. So the reason why I choose this CRT and not any other CRT, simply because we respected the low, swept it, and we respected the high and swept it. That means this is a strong range and one to be chosen. Now, what was the last sweep? The last sweep, of course, was a turtle soup of the highs. That means we are now bearish. Now, we have two confirmations, one being the timed CRT, the second being a lower time frame CRT, 15 minute, within the higher time frame CRT, 4 hour. Now, we do also have a third confirmation, which is the timed purge. The CRT forms at 10 a.m. and was purged at 10:45. Now let's hop onto a 1 day time frame, the daily time frame, to look for a key level to have 4 confirmations for the trade. On the daily time frame, what do we have? Here is our play. We have a clear IFVG right here. And that is indeed the key level. So IFVG play right there. Let's drop back down to a 15-minute time frame. Perfectly executed. As you can see, as soon as the 15-minute CRT was breached, we tapped into the daily key level and price started to reverse here. Of course, if you are waiting for an order block to enter short, you would have seen this form on the 15-minute time frame. A close below this candle is the order block formation. This validates the order block, and you would have likely entered short here, targeting the opposing end of the range, like so. Like this. Stop loss at the highs and your targets at the opposing end of the range, going for a 3.19 R to R trade. All right, let's take a look at a different example, hopping back onto the 4-hour time frame. Randomly here, I want to look at anything. Let's take a look at any 6 a.m. candle. Just delete all of this. 6 a.m. All right. 10 a.m. 6 a.m. candle. No CRT in play. 6 a.m. candle, no CRT in play. 6 a.m. candle, no CRT in play. You know what? We're actually going to go with today's price action just for the sake of it. All right. So we have the 6 a.m. candle, high and low, drawn out by these thick black lines here. 6 a.m. high and low. We have the second candle, the 10 a.m. 4-hour candle, turtle souping the 6 a.m. candle's low and closing back within the range. This is showing signs of bullishness. This is telling me that price will continue running up towards the opposing end, or at minimum the 50% of the candle's range. You now want to locate a 15-minute CRT at the lows of the 4-hour CRT in order to confirm or to use a lower time frame CRT inside of a higher time frame CRT as a potential confirmation. Right, so we want 3 different confirmations. 3 confirmations minimum. So minimum 3 confirmations, right guys? Min 3 confirmations. Of course, 4 is better. Right, 4 includes that key level. So 1 confirmation, number 1 being the higher time frame CRT, which is timed. This is not a random candle that we are picking. This is a high probability time. Timed CRT. Okay. Confirmation number 2 is the lower time frame CRT within the higher time frame CRT. All right. The lower time frame being the 15-minute and the higher time frame being the 4-hour. Now, I didn't draw out the 15-minute CRT yet. However, I know for a fact that there is one. All right. Let's draw it right now. Now, which one would you pick? What is the 15-minute CRT here, knowing that the purge must happen between 10 and 12 a.m.? What is the 15-minute CRT range? Pause the video. Do yourself the favor and pause the video. All right? Are you done? Did you pause it? Those of you who didn't pause are only doing harm to yourself. Okay? We have a 15-minute CRT right over here. Now, why was this not the 15-minute CRT? It very well could have been. However, we never souped that low. Why was it not this? Because we came and closed above the high, right? Now, this CRT instead was formed at 11:30, turtle souped at 11:45, and then again turtle souped once more at 12:15. This would have not stopped you out. Why? Because as soon as price closes above the 15-minute CRT low, if you are using that as a form of entry, then you would have entered long right here, targeting the opposing end of the 4-hour CRT with a stop loss at the swing lows. This is a 2.18 R to R trade. Now, in order to refine your entry and to get a better entry, you must drop down time frames once more. Now, before moving on to the lower time frames, we want to know what is confirmation number 3. Confirmation number 3 is a timed purge, a timed CRT, turtle soup. The timed turtle soup being from 10 a.m. up until 12 a.m. is accepted. Now, do we have a key level here? Hopping onto the daily time frame, what do you notice? Very, very clear. We have a daily fair value gap. Not only do we have a daily fair value gap, but as I mentioned in the other example, you have a daily low. So every time you have the daily fair value gap, it's important to understand that a daily fair value gap is made with daily lows and highs. These are very important key levels. All right, we're going to draw this key level with a blue line. Let's drop down to the 15-minute time frame once more. And as you can see, the 4-hour CRT formed while hitting the key level. This is very important. Okay, so there are many different types of key level reactions. However, before I explain more, let's write this down. Confirmation number 4, the key level. All right, we have 4 confirmations here. An entry long below right here, targeting the opposing end of the range. Now, we have the 4-hour CRT formed as we were hitting the key level. This is one way that you can use the CRT. Now, of course, there are going to be examples where the key level will form something like this, right? Price will come down, hit the key level, and start to reverse back up. Now, there will also probably be a 4-hour CRT like so. Let's turn this black. Price will turtle soup a 4-hour CRT low, then hit the key level, and then expand higher. This right here is the opposite. Price will form the 4-hour CRT while hitting the key level. And then the 4-hour CRT lows will be swept. 15-minute CRT will form within the 4-hour CRT, confirmation number 2. And we enter long off of a 15-minute order block or a 5-minute, 15-minute, 4-minute, 3-minute, 2-minute, 1-minute order block. Let's drop down to a 5-minute chart and try to locate a 5-minute order block. Using the 15-minute CRT, we will try to locate an order block. As you can see, we have one right here. As soon as price closed above this candle, you would confirm the order block and enter with the tap right here or here. So let's put our entry long from here, targeting the opposing end of the 4-hour CRT range with your stop loss right here for a 2.7 R to R trade. Now, can you have entered off of this thinking this was the order block because we turtle souped the 15-minute CRT low? Of course. Now your stop loss would have been a little larger with a 2.25 R to R trade, but it is still very much acceptable. All right. The more advanced students will be executing trades down here. This is what's called the failure swing. All right. Now we really need price to close above these highs right here. This would confirm a market structure shift targeting opposing higher levels. Ultimately, we have equal highs above us. I did say this was going to be a quicker video. However, it's already 20 something minutes in. Just to mention something, the trade here is still in play. You guys are lucky to be getting this video. I just want to also bring something else up, that the midpoint, the equilibrium, has already been hit. That means partials are out, and this is a free trade, basically meaning even if your stop loss is hit, you should still be in profit. That is the point of taking partials. All right, very straightforward, very simple video. I hope you guys enjoyed it. Let me know in the comment section down below what you would want next. I hear there is a lot of gold traders, a lot of crypto traders. Would you like a lecture on crypto using CRT? Let me know in the comments. With that being said, good luck trading, boys. Have a nice one.